Good morning, traders. Today is Friday, November 12th. My name is Charles, and this is the Pirate Traders live stream. Okay, so what are we looking at here this morning? Well, the name of the game is rotation. Yesterday was rotational. It stayed in a very tight range, which was kind of to be expected as it was a holiday and the bigger players had taken the day off. So it would make sense that they'd have some algorithms running to keep the market bracketed pretty tight so their positions can't get away from them. And that may continue into today. It's not unrealistic to imagine the market might rotate for another day today going into the weekend. But the thing to look for is a potential breakout above the all-time high, the overnight high from 2 nights ago, and the overnight low from 2 nights ago, which was basically the same thing I said yesterday. Look for the market to get above this level, find support, and then get continuation higher. And the same thing to the downside. Otherwise, as long as it stays inside that overnight range, it's likely just to chop. I think the same thing is true this morning. That as long as we stay inside this range, we're just going to keep bouncing around in here. And that's not uncommon for the market to do. Overnight inventory is net long once again, so we would expect a counter auction at the open to the downside, looking for support. The first potential support is going to be just right below us at about 46.54. And then if not down here in this area where the market has spent so much time and brought in so much volume. Let me delete that reference so you don't get confused. So this area here, basically between like 50 and 45, that is going to be really good, strong support today. So I think if the market is going to go higher, it'll find support in there and not go much lower. But like I said, if it starts to break below the lows from yesterday, particularly if it gets below that overnight low at 38, we're definitely looking at further downside continuation. Okay. As far as resistance to the upside goes, like I said, they got to break through this node of volume from the overnight here, which is at about 46.59. But beyond that, the next resistance probably isn't going to come into play until we start to get to about 46.69, that level once again. So if we can get above that that high, you could even call it today's overnight high. We're pretty sure we'll push up towards 69 and then see what the market's got for us there. We're opening right on the upper end of yesterday's range, so that still increases the odds of chop. And like I said, we're looking for a counter auction to the downside. But a counter auction that finds support could be the beginning of a push higher. So keep that in mind. And like I said, I wouldn't consider it unreasonable here today if we just had another rotational day in a tight range. So the market is open. Jay Trader, good morning to you. Cyrus, hi. Phoenix, morning. Jose, good morning to you. Diego, good morning. He's short at 58. Jeremy, good to see you. Vincent, good morning. David Glass, good morning to you. Rad back with us. Rad to have you. Nicholas, good morning. Philip, good morning. All right, so here's that counter auction to the downside. Looking for support. Lots of support in here around this 50 to 45 level. Philip, good morning. David, good to see you. Peter back with us. Hello. Amir, good morning to you. Scooball, hello. Good day, Jonathan. Good morning, mateys. Brian, good morning to Friday. Good morning to the day. Oh, no, good morning, Friday. I get it. Ronald, good morning. Arthur, morning from dark California. It's dark AF here in New York. It's raining like crazy outside. Ray Miller in Richmond this morning. Good morning to you. All right, so the NQ looks just exactly the same as the ES, rotational in the same range. Overnight inventory net long, counter auction found support. So for the NQ, I think you could probably just use yesterday's range as potential breakout. You get below yesterday's low, find resistance, you look for continuation lower, you get above yesterday's high, find support, you look for continuation higher, and rotation in between. Seems like a safe bet on the Q. Good morning, Chris and Sebastian. Welcome. All right, let's go back to the ES. For those of you just joining, please smash that like button. It's just a way to say good morning. It's a way to say happy Friday. It's a way to say I like money. So if you like money, you should smash the like. All right, so we're starting to work our way here on the ES into the support. So how the market reacts to this area will give us some indications of what it's looking to do today. What we're looking for is nice taper. We're looking for the volume to just slowly fade off and get thinner and thinner as it works its way down. That is a sign that they are running out of buyers and looking to turn around and head back up. Okay, doesn't look like they're getting it. This is really bad taper at the low. So likely as we push back up, sellers will start to pile on to take another stab at it. Peter, compared to yesterday, this is great movement. That's true. At least we're getting some tempo and some volatility here. This is a great morning to remind yourself that price is just an advertising mechanism. Just because the market is moving lower doesn't mean it has to keep going. It's just moving down to bring in buyers. We'll know it's bringing in more sellers than buyers if they get that tick down there to the zero line. All right, well, we have decent taper on the low. It's not amazing, but it's acceptable taper on the low. So that doesn't mean that'll be the low of the day, but just that if it was, it would be a good low. So now is kind of the moment for the buyers to decide if they want to step in and take another stab at heading up to the high. If not, then we'll give another push lower. And so I'm just keeping an eye on those ticks. Do they continue to pull lower? That's the sellers bringing in more force. But if they can start to kind of trend higher here, that's the buyers stepping in. All right, so the NQ is starting to test yesterday's low. It's a little bit weaker than the ES here. So if that level breaks, they're likely to get some further downside continuation. Next major support for the Q is at about 15,967. So the buyers are only holding it up right now by the hair on their chinny chin chin. So again, if the ES starts to push lower, you got support down here around yesterday's low. Okay, looking at the volume from the previous day. You got that support in there. But after that, it's probably looking for a bigger pullback. Charles, David, Charles, do you feel the buying tail on 1110 would still act as support? Not really, no. I felt weird about the spot where the market found support on that day, because it was in the middle of backfilling single prints. Single prints is like one of those weird things where it just does. Like, it just, once it gets into them, it heads back down to the base, to wherever they started. And you can see, oh, it actually found support right at the top, so it didn't quite get into those single prints. But to me, that was a strange place. Like, that to me seemed like it was more short-term speculators buying there, whereas the larger players would have been layered in down here, and this is where they would have stepped in. So no, I think if we start heading back down that direction, we're likely to try to backfill these single prints today. But it's still a while before we get there. First, we got to break yesterday's low, and then we got to break the overnight low from 2 nights ago. There's plenty of support in there, right? We can literally see it. Look at what's been happening at the volume as we get down into these levels. We run out of buyers, run out of buyers, run out of buyers, right? I mean, sorry, sellers at those levels. So there's support all in here. But once we break this level, yeah, I think we're going back to fill those single prints below. In my humble opinion. Yeah, Fred, that's what I find so interesting about all this option play that's happening now. Like, they say that now options, both in the futures and in the stocks, is the majority of the volume, which is just nuts. And it almost always seems to explain when something random like that happens. Okay, so the ticks on the Q are already pressing below the 0 line, and the ES is heading in that direction. So it looks like the market needs a little bit more of a pullback, and like I said, I'm looking for support around yesterday's low. If yesterday's low breaks, then we've got some further downside continuation. Or really, it'd be better to say this node below the overnight right here, which is just a couple bucks below yesterday's low. That's the real breaking point. Learn to see. Welcome from India. I've had actually a bunch of people from India reach out recently, a bunch of nifty traders asking me for advices. Fausto in the house. Good morning. Welcome. Danielle from Moscow. Very cool. Lamus, long time no see. Good to see you, brother. Welcome. If you look in the description below, there's a link to the software that I use. It's called Window Trader. You'll see the link says Market Profile Software. Okay, so once again, same as before, we got good taper on the low. So that doesn't mean this is the low of the day, but just that if it was, it would be a good low. So now the buyers have a chance to step in here and try to push it higher. They bounced off the 0 line, which is a good sign, but let's see if they can start to trend the ticks higher from here. Pavel, good morning. Welcome. Shubaho Deep in the house. Good to see you. Welcome. Fred, yeah, I know. That's what I love about whenever Donkey brings up that stuff, talking about the market makers and how they approach it. They just do it completely differently. They're not at all paying attention to any fundamentals or anything like that. It's just all about creating a position and then hedging to keep that position profitable. It's truly fascinating, but it's a bit beyond me. Okay, so the NQ now has to poke its way back through that 20 moving average, which might act as resistance there. Man, wouldn't it just be awesome if it was another rotational day inside the same range as yesterday? Wouldn't that just be great? Wouldn't we all just love that? So I'm waiting for the ticks to catch up with the price here. The futures are moving higher, but they're not buying the underlying shares. A sign of rotation. Kim, yeah. Yeah, I was so happy when I opened up the chart this morning and saw what the rest of yesterday looked like. I was so happy I took the rest of the day off. To be honest with you, I felt like this is what was going to happen in the C period. But it was still, one time framing lower, so I had to wait it out. But I was just like, man, I can just tell this is one of those vacation days where the big players head off to the Hamptons and they take that volume out of the market. All right, Rocket, enjoy your weekend, brother. Fred, you'd die of anxiety if that was the case, if it was a rotational day in a tight range. It's very possible. Remember, those bigger players, the reason that they always leave on 3-day weekends is because it's, that's their chance to enjoy a weekend away. So they would have left, including today. I'm not making that prediction yet. There's still a good chance. We need to get above or below yesterday's range, and then we'll start talking. But until then, rotation. Brian says we're about to see a move. You sense it. You feel it coming. I mean, if it's a move now, it's a move down. That's the story the ticks are telling us. But they got good taper on the low, so they ran out of sellers down there the last few times they tried. So it's tricky. Tricky, tricky, tricky. Peter, I have no idea how to trade this now. Well, the good news is you don't have to. You can just sit back, relax, and watch it like you're watching a TV show. You don't have to do anything. This is one of my favorite concepts that I learned from Jim Dalton, which is the idea that you don't look for trades. You don't sit here and say to yourself, how do I trade this? How do I get into a position? What do I do? Instead, you just watch the market. That's it. You just watch what it's doing like it's a TV show, and you're trying to enjoy the plot. And you just look at all the market-generated information, and you ask yourself the question, what is the market trying to do, and how good of a job is it doing of it? So, for example, this morning, it looks like the market is trying to head lower. That's what the internals are telling us. But the volume, the tempo, and the price are telling us that it's not doing a very good job of heading lower. So this is kind of an unknown moment where you're not sure what the market's going to do. But if you're just sitting back and watching the market and you're not looking for trades, what will happen is suddenly the trades will come to you. You'll suddenly realize, oh man, this is what's happening. If I go short now, I could, put my stop here and take profits here and da 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 da. And so then you take action. But in the interim, you're not looking for trades, so there's no reason to feel frustrated. You're just watching the market. Just enjoying the show. Albeit a very exciting one this morning. Jay Trader, how did I spend my afternoon yesterday? I went and got my car detailed and took a bunch of pictures and put it online for sale, finally. I've been wanting to list it for like over a month. If anybody's in the market for a Jeep Commander, let me know. John, you'll start the bid at 22,000. Yeah, definitely way too much. Free shipping. Where do you live overseas though, right, Peter? So that would be quite a lot of shipping. Probably significantly more than it's worth. Jonathan, I don't know, man. Maybe we're connected through the ether. James should be a 30% premium. Yeah, I do have it a little overpriced. Not quite 30% though. But we'll see what happens. Already started getting the scammer emails this morning. So much fun. Jay Trader, do I like the New York subway? That's a difficult question to answer. I don't dislike it. It is very convenient. It works well, especially coming from Los Angeles, where there is no public transportation that's reliable in any way, shape, or form. It's great to have good, reliable public transportation, but I would still prefer to drive. It's just impossible to find parking. It's not worth it. So it's just more convenient to subway it. Besides, I'm on the list for, I was one of the first, I think I was like 110,000th person to get on the wait list for the Cybertruck, the Tesla Cybertruck. So I'll be getting one of those once they finally start to deliver them. Danielle, American subways stink, very dirty. Not right now. That's the one upside to COVID, is they started cleaning the subways. Oh boy, market. Don't do it to us. Not another day of rotation. I don't want it to be true, folks, but this is what the internals are saying. Seeing those ticks passing up and down through the zero line. breaking the downtrend, starting an uptrend. Both markets passing up and down multiple times through the 20 moving average. These are all the telltale signs that there is indecision in this market. Fade the extreme. Can we get a Wednesday POC test? Is that too much to ask? Oof. Well, that would be, that would be a good target for resistance, or a little bit below there on the way back up. But yeah, we would definitely need to break out above these highs first before we could even consider it. Okay, so we have good taper from the low of the day here. I don't know what happened to my little drawing tool. But we got good taper from the low of the day here. And then we're seeing as the B period traded into it, look at how the volume just completely fell off. So that is a sign that there is no more sellers down here at this level. So now the buyers take control and they try to push it higher. We have bad taper on the high here. So that increases the odds that at some point today they're going to try to trade up into here and see if there's more sellers waiting up in that area. But like I said, as of now, it just feels like rotation. Peter, so when does the trade come to you? That's the point, is just that how you look at the markets. It's not about trying to know when the trade will come to you. It's just you kind of do. You know what I mean? It's really hard. It's a hard concept to explain to somebody who's new to looking at the markets this way. But I would challenge you to just try, at least for one day, to not look for any trades. Don't even ask yourself, where do I go long, where do I go short, at all. For one whole day, just watch what the market's doing and ask yourself, what is it doing? Where is it trying to go? Where are they going to find support? If they find support, how far are they going to push it higher? If the support breaks, how big of a pullback is it going to have? Just spend the day watching the market and trying to understand what it's doing and how good of a job it's doing of trying to accomplish that task. And then what will happen is you'll get better and better and better at that. And you'll become very, very good at being able to tell what the market is doing. And then all of a sudden the trades just become very easy. Because you're like, oh, I see they got good taper on the low. We brought in lots of volume here to act as support. So if I were to buy down here, it'd be a pretty safe bet. And then you'd say to yourself, well, it feels rotational. It doesn't feel like it's a really bullish, strong day. So maybe I'll just take profits at the POC instead of trying to wait for a longer push higher. Or maybe I'll take partial profits at the POC and then hold a runner to see if it keeps going. Like the trades just kind of come to you. You just suddenly realize, oh, wait, this is a good way to approach what's happening in the market. That's a good low yesterday. Got good excess on that low. 3 ticks. 4 ticks, in fact. Unless you're talking about the Q. No, good excess on that low as well. John Dalton says he uses market profile for real estate. What does that mean? I don't think he literally does. But it would be a way of tracking home prices the same way that you would track, or whatever real estate you're talking about, tracking those prices over time the same way to see where the market spends the most time and brings in the most volume. But he just says that as like an example that you could do it with any financial market. If you're going to do it with real estate, you'd almost have to have like each letter represent like a year. Like it would be like, you'd have to like chart out what a certain property or type of property has been doing over the last like decade to be able to see any real information. Jonathan, it's like sexiest man alive, Paul Rudd, in Saving Sarah Marshall. But that is true. Actually, surfing is a great example. I've made posts that use that as an example as well. If you understand how surfers surf, right? They don't say like, okay, I'm going to go out here and I'm going to catch 4 waves today. And I'm going to ride each of those waves for 5 minutes. That's my trading day. And then they just sit there and look for 4 waves that they can grab for 5 minutes or whatever. That's not how they do it. They just paddle on out and they just sit and they just watch the waves come in. One wave after another, until they see one that they're like, this is one I can jump on. And then they catch that wave. And once they're on the wave, they're up on their board and they're riding that wave, there's no set destination for how long they stay on the wave or how they maneuver around. They go with the flow. Whatever the wave is giving them, they just ride it as long as they can. That is the way to trade, is to just sit and wait for the opportunities. It always makes me laugh when people are like, I take 4 trades a day, or when I make $1,000, I stop for the day. It's like, what? That's so silly. It's wait, maybe there's no trades one day and maybe there's 20 opportunities the next day. Like you just take whatever the market gives you and you go with the flow, baby. Peter called yesterday a poor low. That makes no sense to me. Oh, you know what it is? He's including the runoff period. That's what it is. So my profiles, I stop the regular trading hours right at 4 p.m. And so he keeps that 15-minute runoff period after the market closes, which is the A period for my chart. So that would be poor. Absolutely. Now I get it. So okay, so now let's step back and ask the question, what's more important, the taper here or the poor low here? If we're going to consider that poor. Well, in the short term today, in this moment, the taper is more important. But as soon as we start to get back down into that taper, guess what we go? Oh, look, a target. That poor low. That's got to get repaired. So yeah, poor lows increase the odds of repair at some point, but it doesn't have to be right away. So right now, in this moment, in the B period today, they're finding support in there. They're running out of sellers. So they don't need to go to the poor low just yet. But good observation. Brian, this is mind numbing. Yes, sir. And it may last all day. What's the difference between a poor and a weak low? It's a great question, and there are different definitions as well. Hold on one second. Okay. So what's the difference between a weak and a poor low? Well, if you want to get really technical with it, like really, really technical, a poor low is when the market comes down and gets within one tick of the low of the day within the same day. Okay. So if this A period had been part of, if it had been an N period here, the N would have come down to right there and been one tick from the M. So that makes it a poor low. A weak low is if it comes down within one tick of another reference. So, for example, looking at my charts, the A period low would be weak because it's within one tick of the M period low. But on this channel, I just call every low that's weak at the low of the day a poor low, just to keep it simple. So the way I describe it is poor lows are any weak reference at the low of the day. And a weak reference is something that's weak within the range. So if we were to stretch out the overnight here, we would have said that the U low is weak because it's the same as the T low, and the V because it's the same as the U, and the X because it's the same as the V, and then the lowercase a because it's the same as the others. And then this would have been the excess to repair that weakness. As soon as they repaired it, market headed in the other direction. Man, still completely inside yesterday's range. And the internals are screaming rotation. Cyrus, have I found that most market profile traders stop their TPOs at 4 p.m.? I have not. I don't watch anybody else's stuff. I might be convinced to add it in, though. It's something that keeps coming up. So, like, for example, if today we go down there and we repair that, so the market comes down and it pushes and it gets just a few ticks below and then it pulls right back up, then I might say to myself, I really need to include that 15 minutes. Because I assume most traders include that in this profile. I just wanted to keep it real simple and have a profile for just when I'm trading the market. I do not fade the extreme. I don't watch Footprint or the DOM. I really just watch what you guys are seeing in front of you. Just the market profile. You'd be shocked how much information, like just 3 simple things will give you. Where is the volume? How much time is the market spending in different areas? And what is the tempo? What speed is it moving up and down at? Those 3 things can give you everything you need to trade. I just find the internals give me a little bit of an extra edge when I'm uncertain about what's happening in the chart. But you can really pick everything up from volume, time, and tempo. And if you're wondering, if you're saying to yourself, Charles, I've been looking at market profile for a long time and I can't sense that stuff. I can't tell just from volume and time and tempo what the market's doing. My suggestion would be stop looking at the other things that you look at. You're giving your brain too much to compute. I became really good at reading the profile because for a while it was the only thing I looked at. I literally got rid of everything else and just watched the profile for a few months. And then I started to bring in the internals. But it was when literally this was all I watched all day, every day, that suddenly my brain was able to start making connections and being like, okay, I see what's happening here. And, I sense this. And it came from laser focus on this. And only now I can start to add on more and more to it because I now have a good understanding of this. So it's like I started by learning to just play the guitar. And now I'm learning to play some other instruments too. But first I had to master the guitar. If I'm trying to learn to play the guitar and the trombone and the drums all at the same time, I'm not going to become a master of any of them. Do people still play the trombone? It's a cool sounding instrument. Chris Evan, is there any significance to weak or poor highs? Oh, yes, my friend. Major significance. So when you have a weak reference in the market, so like I showed earlier in the overnight, right? Those weak references there. It does two things. First off, it gives you insight as to who the buyers were at that level, and they're going to be short-term buyers, right? Larger players who have a lot more money, they don't buy at an exact level. They can't. They just have too much size. They have to do what's called layering in. So if they were looking at the chart and they wanted to buy this, they'd put some orders here and here and here and here. They'd layer their orders in. They wouldn't have them all sitting at exactly one level. So when you start to see the market coming back to an exact level over and over again, you know it's short-term traders. It's people like you and me, just retail traders who are looking at candlesticks and they're seeing that, oh, okay, look, we made the high here, so we'll sell it again here, we'll sell it again here. Like they're just trying to get the highest possible tick they can. They're trying to get short. And so that's why we call it weak. That doesn't mean there's anything wrong with entering a trade there. It just means that it's shorter term traders. So that's the first signal you get from weak references. And then the other thing is they are more probable to get repaired because you didn't really get to have good two-way trade there, because the buyers forced the market back up. There might still be some sellers that are willing to sell here, and the market will always move to wherever there is two-sided trade to take place. So if there's still a few sellers in here, let me just open that up so I can show it as an example. So if the buyers keep forcing the market up at this exact level over and over again, but there's still some people waiting to sell, the market just always does. Well, not always. It is a slightly higher probability that it's going to come back down and push through there to give the sellers a chance who want to do business down there. Now, of course, all they need to do is get 2 ticks. That's it. And then if those sellers run out, the market turns around and heads the other way. So that's why we consider 2 ticks to be good excess. But if they're sellers that want to do business down there don't get a chance, it just slightly increases the odds that the market will move down there. And so any one weak reference is no big deal. We leave weak references behind all the time. But the more of them that you stack up, if you get a bunch of weak references like you did here, where you got like 5 in a row, that really increases the odds that it'll get repaired. And so poor references, which are weak references at the high or low of the day, they work very similar in the fact that they show us it's short-term traders, but they have a unique thing about them that often when the market creates that poor low, so let's say the C period traded down exactly to the A period low, and then it started to go back up, they often get what we call a push away, where the market will go the opposite direction of the poor low, but it almost always, with much higher probability than a weak reference, it almost always comes back down and repairs it. So that can be a really powerful thing to either, if you're very quick with your market buy, you can often catch the push away, or you can look to go back to the poor low later. So if the C period traded down here, created a poor low, pushed away, started trending higher, and you see the market finding resistance, you can get into a short trade with a lot more confidence because you know there's a higher probability it's going to come back down and repair that poor low. All right, and that is it for the day today. Going to go ahead and switch over to the private stream now that we're here in the C period, which is inside the B period, which is inside the A period. So the first thing we're going to look for now is which direction does the C period break of the B period? Does the C high get above the B period high, or does it get below the B period low? And we'll likely get some continuation in that direction. But as long as it stays inside, I mean, this is just chop. And we're going to keep getting chop. So with that, I bid you all farewell, and I wish you the most fun weekend possible. And I will see you all here on Monday morning. If you wanted to keep hanging out for the rest of the day, all you got to do is join the Brigade. There's a link in the description. It costs $10 a month. and it's a fun environment to be part of. So, all right, I will see you Brigade members on the private stream. Have a good weekend, everyone.